Ladies and gentlemen, good morning and welcome to Automotive Excel Limited investor call organized by Batliwala and Karani Securities India Private Limited. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star 1. Please note that this conference is recorded. I will now like to turn the conference over to Mr. Shailesh Raja. Thank you and over to you, sir.
Yeah, thanks, Mayuri. Good morning, everybody, and thank you for joining us for Automotive Axles Limited third quarter of FY22 earnings conference call. So during this call, from the management side, we'll be hearing from Mr. Timmaya, MD and CEO of Meritor India, and Mr. Muthukumar, full-time Director of Automotive Axles, and Mr. Ranganathan, CFO, Automotive Axles. I would now like to turn the call to Mr. Timmaya for the opening remarks, followed by Q&A. You may begin now.
Yeah, okay. Good morning, all of you, and thank you very much, Mr. Shailesh Raja, for the opportunity. We'll just let Muthu do all the go through the presentation, and then I'll come back along with him for the question and answer session, please. Muthu, over to you.
Thank you, Timaya, and ladies and gentlemen, good morning to everyone, and I wish you a very, very happy New Year. A little late, but at the same time, I hope all you and your family members are safe. For the FY21 revenue, I think we all know that we have done about 913 crore revenue with an EBITDA of about 8% and PBT of 3.3%. For those of the people who are joining for the first time, Automotive Axles has 4 manufacturing locations in India. We have Mysore, which is the mother plant. We have Jamshedpur, Pantnagar, and in Hosur. Your company has an equity share of Meritor Incorporated USA by 35.5% and Kalyani Group from India on 35.5%, and rest is in the public. We have more than 2,000 plus dedicated employees who make all these products, test the product, and ensure that the product is good for the customers. And in India, we have all major customers in the commercial vehicle segment, specialty, and defense OEMs. For those of you who want to learn, we have our products like axles, brakes, and suspension in the commercial vehicle segment. As an independent axle manufacturer in India, we are holding the number 1 position as an independent axle manufacturer, and in terms of the brakes, we are number 2 in terms of the share of business. Just want to give an update to COVID. In your company, all the people, 99.5% of the people are vaccinated, both the doses. Including all affiliate people and anyone who is getting into the campus. People who walk into the campus are also vaccinated. Continues to keep awareness for people and sensitizing the employees and their families on COVID appropriate behavior. Our leadership team continues to keep the regular communication to the people on adherence to protocol and also make sure that people follow the protocol outside the things. We have a shift pattern, alternate working pattern created so that all the employees of the organization are working from office. Continuous sanitization is put in throughout the plant and office areas. And of course, we have initiated various things in our canteen like disposable plates, cups, spoons to ensure that we follow COVID appropriate behavior. The company also spent a lot of time in making sure that we take it to the society and ensure that the entire society is also educated, and we also worked with the government to help them in vaccination. We have a diverse end markets and major customers. And if you see, we are present in truck, trailer, bus, off-highway, military, and aftermarket. Meritor and Automotive Axle provides an excellent aftermarket solution. The major customers in India, just to name a few, we have Ashok Leyland, we have Tata, Mahindra, Daimler, Volvo Asia Commercial, Bharat Forge and Kalyani Group, Caterpillar, Volvo Thailand, to name a few. Your company has an extensive range of axles and brakes. We start with an axle called 10X, which is a 6-ton axle, and up to hub reduction axles, which is about 55 ton to 60 ton, which is an extra heavy vehicle. Similarly, for the entire range of vehicles in the commercial vehicle segment from 6 ton to 60 ton, we have the brakes also and applicable brake sets available. And thereby, every customer at the end of the day feels that Meritor is a solution provider for the entire requirement of their business segments in terms of axles and brakes. Your company has invested a lot during the year 18-19, and the latest MX assembly plant coming up the next slide, is completely wired. It's using the technologies of artificial intelligence and Industry 4.0. Our local team from the factory, a group of engineers working with external people, and created this. Currently, the entire plant of new assembly plant, which is a final area where before it goes to the customer, is working on smart manufacturing system. I take this opportunity to request you, maybe the travel time permits, if the travel permits during the next time, maybe during the AGM, and if you are going to have it in physical form, we request all of you to visit the plant and see this. We also have a digital assembly line which is being set up similar to the final assembly line, and these are the next set of missions will come, and we have a very clear visibility and plans to take this organization to, by FY25, the entire 33-year-old plant will become an Industry 4.0 compliant. Lot of technology initiatives during the last 2 years of COVID period. The company's team of innovating team has identified in terms of the welding, in terms of the machining, in terms of the gear manufacturing, in terms of the assembly, to keep continuously cost at check and make sure that the company is always competitive and in terms of delivering the best of the quality delivery to the customer, which is really helping us to increase the business. One of the key actions to manage the business successfully, we are having a growth strategy. I think Timaya presented in the earlier sessions on our Mission 25, and God will talk about our Mission 25 objective later. The new business and opportunities in the pipeline. Most of the new product development, what our engineering team launches, is full of reliability and at a competitive price, which makes us to get into the business. We are driving e-mobility business into the system, even though it is at a very nascent stage today. I think we are getting ourselves prepared for e-mobility business in days to come. And digitalization and implementation of 4.0 is one of the key for us to be more competitive and reliable in the days to come, and geared up with the capacity to cater the rising market demand in the years to come. In terms of the cost control, enough actions have been taken in terms of cost control measures in place of conversion cost, value engineering, and thereby reducing the material cost, and of course, control on the manpower cost to make it more and more efficient. While the company is working on productivity of, we call it the same amount of productivity improvement or a value added improvement is done on the managerial staff also to ensure that we are optimized cost. There's a huge commodity price that is going up, which is giving a continuous pressure in the organization, and without this cost reduction, we would have been in a very, very challenging state. But yet today, some of the initiatives that we have taken is really helping us to keep progressing. Our continues to focus on the overall cost optimization, and significant savings is expected during our Mission 22 time frame. The company continues to follow the safety practices of regular and continuous audits. Multi-shift operation continues across the location, and as I earlier indicated, 99% of the people are vaccinated, and we are continuing with COVID protocols. You all know that while we are on the automobile business and we are focusing on our productivity things, sustainability is one of the key. And I think 2 meetings prior, which Timaya touched upon, our initiative will talk to you. Maybe this is one thing that we want to do. Currently at 25% to 27% of our power consumption, what we are using in the plant is by the solar power with some suppliers who are dedicated solar power that we have. Your company is planning to take it by FY27 to take it to 90% of the power consumption. We will be with solar power. That means that amount of carbon emissions will be brought down substantially, and that is going to be a key initiative for us in terms of sustainability. The same thing, we are using LPG in our furnace, and we are going to migrate to LNG, which is again going to be another initiative for making our carbon emission reduction. We have seen our initiatives way back in terms of groundwater level. We continue to focus on, it's a zero discharge facility, and we continue to focus on harvesting water, and you can see our groundwater facilities is coming up. We also not only looking at getting the power from sustainable things, also focusing on how the outbound logistics and inbound logistics is working efficiently. From the truck loading, axles is a component which is bulk. It accommodates volume, but not the value. But one of the factors that we are working on truck loading efficiency, to take it from 76% to 85% is the project that we are working. Digitalization and paperless office is going to be the drive, which I have already indicated to you on Internet of Things and artificial intelligence. The team will continue to work and ensure that we become a paperless office by 2025. Any organization depends on the society, and it is our responsibility to give back to the society. A lot of programs that we are working with local administration, local management, in terms of environment and road safety, education to underprivileged, healthcare infrastructure. I think what we have created in Mysore is one of the, it has benefited the local residents a lot. Of course, making clean water and lake renovation as our projects. We are working on ISO 26000 certification for our CSR assurance in the year 23-24. Corporate governance continues to be our focus in terms of stakeholder management, total employee engagement, gender equity, and reduce attrition by 2023, and excellence in corporate. Many of the things is with after post-COVID, the challenges on the people engagement and also reducing attrition is one of the key. And at this point,
Sorry to interrupt your line. Hello?
Yes. Yes.
Dr. Muthukumar, your line is not clear.
Can you hear now?
Yeah, it's better now. And Mr.
Yeah.
S. Ranganathan is also connected now. Okay?
Oh, thank you very much. Thanks for connecting, Ranganathan.
Yeah.
I think he has come on right on time. I have to change it to the next slide. Gender equity and reduce attrition. And I'm just very happy to see that we have a very good engagement of the people. And we did a lot of initiatives during the time for keeping the people not only physically strong, but physically, mentally, and keeping our people strong. And excellence in corporate governance is our thing. With those slides, I think Mr. Ranga has joined now. I'm handing over to Mr. Ranganathan, our CFO, for taking you to the financial results of this quarter and our growth through Mission 25 strategy. Over to you, Ranga.
Thank you, Muthu. Very good morning to all of you. A little bit of connectivity issue. I joined a little late. Quickly take you the financial results for this quarter. For the Q3 21-22, we have achieved about 376 crores as a revenue. As compared to the previous year, we are up by 37%. As far as the EBITDA is concerned, we are at 9.7% as compared to 9.9% last year, the same quarter. As well as the overall PBIT, we have reached about 7.1, which are 6.3 last year, the same quarter. So the EBITDA level, the little bit of drop, what you can see is basically the two factors I just wanted to bring the attention of the investors. One is about the 2021 and 22, we absorbed a huge amount of commodity increases. As all of you know, commodity increases, the customers only reinvested the cost. So we had a huge base impact which we absorbed in the current financial year, as well as in the last financial year due to COVID. A lot of discrete expenditures we have substantially reduced to sustain the level of operation last year, which is little normalized this year. The two factors which is really influencing the EBITDA percentage for the current quarter. Nevertheless, a lot of efforts are gone in terms of the continuous improvement, especially the material cost performance and the conversion cost performances, which have significantly contributed to bring the performance for this quarter to the same level of the last year, in spite of the high impact of the commodity price increases. So that's one of the points. As far as the cash flow is concerned, the cash flow for the quarter and for the 9 months ended, we are quite positive. And the continuous focus on the inventories in the fluctuating business scenario, make sure that we control the inventory to the size of volumes what we see in the market, so that we bring the better cash flow for this year. So we continue our focus on NPD, operational excellence, and cost optimization as part of our M25 strategy. The last slide is about basically gives a glimpse of between 2014 and as of now how the MSCV market going and how is other revenue growth within the market. As all of you say, we continue to focus and make sure that we perform better than the market, and even in the downturn on upstream, so that we are ahead of the market and make sure that we are trying to be a little ahead of the market. So largely the 5 M25 focus areas: the grow revenue, enhance profitability, new business wins, operational excellence, and customer value. All the initiatives are led by internal team leaders, and most of the initiatives is going as per the track, as per the strategic goals. So the 2021-22, if you could see the last 3 years, if you see the MHCV market, 2019-20, roughly around 250,000 vehicle level. In 2021, it came to 197,000 vehicle level. 2021-22, we are estimating around 270 to 280,000 vehicle level. So definitely, we will be working closely with all the OEs, ensure that we bring the better revenue share and profitability for this current financial year, so that we bring the better results at the end of March. So with that, the presentation is over. So I will give back to the NK team for the question and answer.
Certainly. Give me a few seconds. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star 1 on your phone and await your turn to ask question when guided by me. If your question has been answered before your turn and you wish to withdraw your request, you may do so by pressing star 1 again. We have first question from the line of Mr. Nishit Jain from Axis Capital. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. So my first question is on the MHCV industry. You talked about that you expect a recovery. So just wanted to understand, are you seeing a recovery more broad-based going ahead? We have seen that demand for tractor trailers and all is relatively slow, while there is good demand for tippers. So how are you seeing this recovery playing out across the segments, and what will be the actual driver of the recovery? Will it be more like a replacement demand picking up, or do you think that fleet operators are also starting to look for addition of fleets in the light of better freight demand? So that was my first question. And second question is on the commodity cost. Can you share some numbers? What kind of price hikes you have already got from the CV companies because of higher commodity prices, and how much of under recovery is still left till Q3 levels? Thank you so much.
Muthu, you want to answer?
Okay, Timaya. Thank you, Timaya. Thanks, Shane, for this question. We are seeing definitely a recovery in the commercial vehicle segment, not only from the OEM production, but also on the registration, what is happening. You asked a specific question also, we don't see much on the tractor trailer. You're right. The market this time, post-COVID, what is happening is the ICV and the tippers are growing. Even multi-axle vehicles were not there till last quarter. And this quarter, we see a good demand of multi-axle vehicle, which means that the truck utilization is good and most of the fleet operators are buying the truck now. So with the government positive budget on the infrastructure that's going to happen, roadworks is going to happen, the ICV for last mile connectivity of the e-com business is going to grow, the tipper business is going to grow. But I'm sure that with the truck utilization going up post reduction of diesel prices, most of the fleet operators are showing some interest to do. But if you ask us whether the sentiment is good and it's going to grow full, we need to wait and watch for next 2 quarters. But there is definitely a demand for trucks, and the registration is in the positive trend. That's on the first question. On second question on commodity, yes, it is a very, very challenging moment that one side raw material suppliers are increasing the price, on the other side OEMs are doing. While I can't say that how much we are recovering and not there, but your companies continue to put in pressure on both the side balancing to see that our customers are competitive, at the same time it doesn't impact our financials. Vinay, if you want to add anything on this, you can add to that.
No, maybe a quick one on the first one. We are seeing, okay, as you rightly said, that segment-wise in commercial vehicle, if you see, the segments always shifts depending upon what is key for those quarters or those years. But I think with e-commerce picking up, the light commercial vehicle or the medium commercial vehicle as well as tipper demand is going up. And now with the infrastructure and economical activity starts picking up, even the tractor trailer and other haulage we'll see the pickup. One thing is, we are seeing, other than some blips in a month or two because of the COVID, we are seeing month on month good improvements in the overall sales and registration of the vehicles in the marketplace. every quarter, if we see that there is a good growth is happening, and we expect that this will continue for next many quarters.
Got it, sir. So just one last question. You had in the past talked about multiple new growth opportunities for Automotive Axles, exports, plus new axle launches that you are targeting, different applications on military, defense, and all these sort of things. And so just wanted to understand how is the progress on that? Because of weaker industry, have we delayed our new product launches, or they are on track to be launched? Some color on that. And a related part is Tata Motors still does a lot of in-house axle manufacturing. Any change in that? Are you seeing increased share of business coming in from Tata Motors as well?
No, in terms of the new products, we are not stopped anything. We continue to develop the new products, and we are penetrating. And I think you don't see much of those reflecting on the revenue, mainly because of the overall market is still in the recovery mode. So we are continues to focus on the new product development, and which is happening. And we have won few businesses which is getting launched. There is a slow ramp ups are happening, and that we are very upbeat about all the new things what we are trying to do. Coming back on the Tata Motors, I think this is again we continue to work, but we are not seeing any breakthrough at this point of time. But it's a very long drawn process, and still they are making everything in-house. Very small offtake which is happening from us, but our endeavor to continue to drive is happening.
Okay, thank you so much. I'll fall back in the queue.
Thank you, Mr. Chanan. Before taking next question from the line of Mr. Sunil Kothari from Unique AMC LLP, any other participants who ask question, please press star one on your phone. Mr. Kothari, you can go ahead.
Thank you. Thank you, Mrs. Timaya and team. Really great job you people are doing, sir. Sir, what is our out of this 9 months revenue? What the revenue from exports, maybe direct or indirect, if percentage or absolute, whatever you would like to disclose?
We don't give a segment-wise breakup though, but Ranga, you want to high level you want to talk? Is it increased? Didn't increase because we don't give the split to the outside market in our segment splits. So, but high level, I think Muthu or Ranga, you can just talk about what's happening in the export front.
Yeah, just one word Muthu can add it. The export probably is more or less consistent irrespective of the domestic demand fluctuations. And what they have been serving, there is no reduction in the demand. So quite consistent. The percentage might share, it depends on the domestic market share. But the volume what we serve to the customers like UV trucks or our military entities outside India, that's quite consistent all this time. So the percentage is quite volatile because last year 2020-21 the domestic market is substantially fallen down and is improving now. So it is as Timaya said, we don't want to give a kind of specific statistics on the share of exports, but nevertheless that's quite consistent and doing well. On the perspective of exports, Muthu can add that.
Thank you, Ranga. If you see the market globally, the North American market and the South American markets are really going up, whereas the rest of the markets are flat. China is also set to go. We are doing two types of export. One is we are giving it to Indian customers. They ask us question on Tata Motors or Asia. Those all the companies which are when it comes to the question of exports, they take military axles because they know the reliability of the product. Even Ashok Leyland does more than about whatever the exports that they are doing, they use our axles. As far as the standalone exports from us, I think I like what we said, we don't normally give the numbers, but I can say that we have a slight growth this year with the market going. But I also wanted to tell you, exports is quite challenging with the commodity prices going up locally, and at the same time, the cost of transportation has become horrendously high. So that's another challenge that we are facing on exports. in recovering from the customers or making them to absorb. Nobody is willing to absorb at this point in time. That is one of the challenging moments in export. Currently, most of the Indian manufacturers is going through.
Thanks for detailed reply, sir. Sir, my next question is on the defense, which we always talk about as an opportunity. And looking at the current government stress on localization, import substitution, some exports also, do you think this can be a really respectable size of our business maybe over the next 3-5 year period?
Muthu, again, I think you're...
Yes. Yes, sir. Can you hear me? Thanks for the question. I think defense is going to be a great opportunity that we're going to have. I think we should definitely appreciate the effort the government is going to put it up. And in this budget, they've even gone up to 68%. Good amount of support is coming. You know, we have developed more than about 12 to 13 different platforms for export, giving it to the customers. And it is at the various stages of proto development, approval and all. One thing is government has not really released for the purchasing of these vehicles. And whatever little going, you know, we supply in full to the OEMs, various OEMs and doing. So I strongly believe that the amount of development activities and amount of investment that we are doing in the exports will definitely help us by 25-26 when the real volumes is going to be released by the government. I think last 2 years we also need to appreciate the government has diverted a lot of funds to COVID-related things, and they are really not able to do for the buying of the equipment. But now things are getting changed. I think a lot amount of money will get released is what we believe. So don't worry, we have enough products in the pipeline which is going to definitely grow this business.
Great, sir. Wish you good luck. Thank you very much.
Thank you, Mr. Kothari. We have next question from the line of Mr. Mitesh Shah from Motilal Oswal Asset Management Company. Please go ahead.
Yeah, thanks for the opportunity. So just a couple of questions from my side. One is if you can highlight us what is the utilization rate in this quarter. I don't know if you answered that earlier, but what's your current capacity that you've added? What was your previous capacity and what have you expanded in 2018-19? And what can be your peak revenues?
So, okay, let me answer that. We have invested into capacity during the peak year, 2018, 19, 19, 20. We completed all the capacity expansion, etc. because we know that our market is a cyclical market and we cannot really time it. So we always want to keep some excess capacity because when during the upturn we can capitalize on that. At this point of time, still we are capacity utilization wise, we are at around 60-65% level. So if the market comes back, which we are all expecting in the coming months and quarters, our capacity utilization will go up and that will significantly will boost our financials. And because we are still operating at around 60-65, we don't intend to add capacity at least for another 2 years.
Got the point, sir. And sir, how much of our revenues now will come from below 16-tonner 16-tonner CV, and how much will be above 16-tonner? Any broad number if you can share, and also if you can highlight that above 16 will be higher margin versus below 16 slightly lower margin.
Again, we do not give those specific details. Only thing is our range is 7.5 tonner and above. And again, as earlier I was just saying that there are always a monthly, quarterly segment fluctuation will keep happening depending upon the OEMs. Last few months the CNG is a big hit. Though a lot of sales are happening in medium duty vehicle and intermediate commercial vehicles, ICVs and higher side of LCVs, etc. So I think it's because we have a complete product range from 7.5 to 10, these shifts will keep happening and we are very well covered. Exactly the split we will not be able to provide.
But directionally, can you tell, sir? I'm just trying to understand within your product mix, what sales will you make more margin and what sales will you make lower margin? Directionally, without commenting on numbers, would that be possible for you to just give us a directional view that if defense does very well or off-highway does very well versus CV will do better within CV? higher tonnage will do better with higher margin versus lower tonnage is lower margin. If you can give us some clarity around that, will be very helpful.
Yeah, maybe if we do more tipper, it's a good news for us from the financial angle.
Okay. And what about the other segments like defense and all will be higher margin than CV directionally?
Yeah, more, yes, definitely, yes.
Okay, got it. And final question is on the EV part of the business. How do you look at that opportunity? And globally, we do understand Meritor has some products on the EV side. So just some comments on that, if you can highlight that, will the product be different or is it going to be the same product, or how will be the difference in realization? Some comments on that will be very helpful. Thank you.
No, I think, if you see from the marketplace, there is so much of EV activities are happening in the marketplace. All the new people, a lot of new people are coming into the market. The old people are trying to develop the product. Our company, my personal belief, and also we believe in our company is, it is just a matter of time. Whether the time is 5 years or 10 years, only time will tell. EV penetration is going to increase significantly over the next 7 to 10 years for sure, even in commercial vehicles. Whether that's a pure battery electric or it's an hydrogen fuel cell vehicle, we need to see. Mostly after the EV, then hydrogen fuel cell vehicle will take over and they will really do well. This is what our prediction is, and that's one. Coming back in terms of product, I think Meritor globally, we have a really good product for the electrical vehicle, including the fuel cell vehicle. And the product is very different. Even though it's called as an e-axle, it looks and feels maybe same in terms of the wheel and the housing, etc. Our e-axle is the integrated axle. The motor sits inside the axle itself, and then you just connect it to the battery for the drive. So we have our product. We are in the process of giving the samples to few OEMs, and then it has got very good future for sure.
Sure. And sir, if I may squeeze one more question on the brakes part of the business, which is again a lower margin business for us, and we are number 2 and not number 1, unlike axle. So what steps are we taking to improve margins there?
Muthu?
Not only on brakes, every product, the company continues to do the value engineering and improve the product. Over a period of time, when our overall profitability goes up, it is going in every segment that we work with. The Mission 25 objective, what Mr. Ranga talked about, the launching the new product and making sure that these new products makes it an upgraded reliability at the same time, less on weight, less on cost is the objective of this. And process, I think the brakes if you take it under standalone, the profitability is going up closer to the customer. That is the main reason why our company has invested a facility in Jamshedpur and Pantnagar, so that the local sourcing, local manufacturing obviously reduces your logistics cost. You all know that the logistics cost is one of the key which we are all working closer to the customer. Definitely it is going to bring and add to our bottom line. But the other things, the challenges are there. Whenever you do value engineering, whenever you go closer to the customer also expects the profitability may not reflect in bottom line directly to us, but it also needs to be shared with customer because he also does equal amount of activities to support this initiative. So I'll not say that it will not come 100% towards whatever the saving we do, but we have a very, very transparent mechanism to work with customers so that it becomes a win-win for both of we and our customers in the long term. Thank you.
No, that's helpful. Actually, another related question to this. So, if I have to look at your brake business, give or take, it's a lower single-digit margin business, and I'm sure that from a return on capital employed perspective, it wouldn't make a lot of sense to work at that margin over a medium to longer term period. And if I have to look at your competitors, they have also been, historically their margins were very high, and they have also come out, right, which is in public domain in terms of financials. I'm just trying to understand, is it going to be a situation where the leader doesn't allow you to take price increase because he also doesn't want to give market share, and hence it becomes a situation where two players will fight, essentially no one makes money at the end of the day. So just trying to understand, do you think that kind of situation prevails in the marketplace, or do you think there's a rationalization where the leader is also focused now on margins and allowing you to take price increase along with them taking price increase?
I think I cannot comment on the leader, but we continue. Sorry, go ahead, sir.
Muthu, I'll just take this. One is we can't comment on our competitors on what their strategy is. The only thing I can tell them is they have a wider range of products in the brake side. Unlike us, we are only a commercial vehicle player in terms of the brake. Brake is a very complicated product, and also, a lot of people are trying to enter into the brake market. The only way probably we will be there in the game is continue to work on improvising the brake performance, and then someday the brake will also transition into e-axle. The brakes should be different, and then it's also a volume game. Now today the volumes are very low. When the volume comes back, we will probably do a million brake kind of a thing. Then I think absorption will increase and we will improve. But we are also working, as Muthu was saying earlier, we are also working continuously on improving our margin. Whether we want to get out of the brake business because it's we are never told that the brake business is a low profit margin business. This is probably your intelligence. But I'm just saying that our endeavor is to make more margin in every product line we are working on. And will we be there in brake business? Definitely yes. We are trying to increase our penetration in the brake and also bringing new products in the brake, and we will be a serious player now in medium term and long term.
Sure, sir. I'll come back in queue with more questions. Thank you.
Thank you, Mr. Shah. Before taking next question from the line of Mr. Jash Shah from Value Investment Advisory Private Limited, participants who ask questions, please press star 1 and get in the queue. Mr. Shah, please go ahead.
Good morning, sir. My questions have been answered. Thank you.
Thank you, Mr. Shah. So we have next question from the line of Mr. Pritesh Chheda from Lucky Investment. Please go ahead.
Yes, sir. One clarification to one of the participants. You mentioned about a capacity utilization figure at 65%. Now, in FY19, we did 1900 crore of revenues, and lot of our capacity has got created after that. Then I was a little bit confused with this 65% capacity utilization. Did you mean for a shift basis, or there is some other logic to it? Because if you have added a lot of capex after 19, then ideally your capacity utilization should be much lower than this 65%.
Yes and no. The one reason I'll tell you, in 18-19 when we are in 1900 crores, and the capacity infusion was happening during that period also. It is not that the capacity got created after the 18-19 upturn. We invested a lot of capacity.
Sir, I'll just intervene here, because what we see is that your asset got capitalized in FY20 only. It didn't get capitalized in FY19.
Yeah, possible, because the asset capitalization happens when all the PPAP is done and all.
Can I add something?
Yes, please go ahead.
Just for clarity, what you asked. When we are increasing the capacity, when we are investing in the capacity, there are two types of moves. One is towards automation, and second towards really increasing the capacity. What Punya can continue after this, but what we did is 1890 we started looking at the market.
Mr. Ranganathan, sorry to interrupt. Your voice is not clear.
Speak up, Ranga.
Are you able to hear me now?
Yeah, I can hear you, sir. You can go ahead.
Yes, sir, it's clear now.
Overall capex is one towards automizing the manufacturing line, and other towards increasing specifically towards increasing the capacity. Both the times the investments have happened. So like what Punya is trying to say is, yes, there are some larger capital probably got capitalized in the year of 1920. I do agree that point, but here and there, a lot of leverages in 80/90 also we did in terms of support, to line with the market demand. So 18/19 definitely the additional point, probably one point we need to do is we work more or less effortlessly entire year in 3 shifts and all the days, including the Sundays and also the weekly offs. So it is really not a sustainable model, but we did it. Our team did it to make sure that we meet the market demand. We don't want to get the customer down. So that is not a sustainable model. So we have actually put on more than 10-15% more efforts what we can normally produce it, and that's not a healthy sign for the manufacturing systems. But definitely yes, but a lot of things we have capitalized due to the procedural aspect, but some amount of capital infusion has also happened for capacity in 18/19, largely in 19/20, I could agree with. So that's one clarity I just want to give it, and I can add this more.
So, sir, this
Yeah,
sir, go ahead.
I think, Ranga, you answered very well. Also during peak years, when you don't have capacity, when the demand is there, you'll end up running the lines during lunch times, have more people, and then make sure that there are movements don't stop at all. And as he was mentioning, all Sundays we used to work, all public holidays we used to work.
So this 400 crore block on ground now, what kind of revenue or asset turn this 400 crore can generate?
Ranga, you want to answer?
Yeah, 1 month. Just a minute.
So, maybe, as I'm saying that currently the capacity utilization is 60-65% level. Say, for example, on a sustainable model, the capacity utilization can go up to 90% level. That is an incremental revenue we can generate out of this existing capacity.
So basically, it can go to 2,500 crores only. If your quarterly run rate today is about 374 crores at 65%, which means 575 crore on a quarterly basis into 4, so about 2,500 crore. Is that the way one should look at it?
Yeah, you could look into that way, yes.
Okay, and my second clarification is on the presentation. So when we were mentioning this volume number at the end of the presentation, MHCV. So here what we have considered 6 tonner and above as the volume number?
7.5 ton and above.
And that's largely our product line, or do we sell anything in the LCV side also?
7.5 is our product line. We don't sell anything lesser than that.
Thank you.
GVW.
Okay. Thank you very much, sir, and all the best to you, sir. Thank you.
Thank you very much.
Thank you, Mr. Cheda. We have question from the line of Mr. Mitesh Shah from Motilal Oswal Asset Management. Please go ahead.
Yeah, thanks for the follow-up. Sir, I had the same question, slightly confused here. So if I have to just look at your gross block breakup, you had 160 crore worth of plant and machinery, which is moved to 330 crores. So logically, doubling of plant and machinery. And I do agree there is some land and obviously some tech spend that you would have done. So essentially, shouldn't the revenue be double of what was your peak cycle revenues from 1,900 to 3,800 crores? If everything would have doubled up, why shouldn't the revenues also not double? Anything has changed from a mix perspective or something that we should be knowing about?
No, if you see the capital infusion, what we have done and what we continues to do, a lot of money we also in just not capacity enhancement. The money we also spend in automation, we spend in IoT, upgrading our lines, quality purposes. There are a lot of, capital need to be infused into ensure that, we become a world-class manufacturing and not just the capacity increase.
Okay. Sure, sir. Thank you so much.
Thank you, Mr. Shah. We have next question from the line of Mr. Sagar Parekh from Deep Finance. Please go ahead.
Yeah, hi. Thanks for taking my question. My question is on the same, continuing with the same conversation. So in the last 9 months, we would have, significantly increased the prices because of the commodities, which is a pass-through. So this 375 crores of top line also includes some price increases. So if I adjust that, then this 1,900 crores peak top line going to 2,500 crores just doesn't make sense, because 25% price increases, if I reduce that, then you're probably at the same level. So I'm just confused here.
Ranga, you want to answer?
No, I don't know where you're getting 25% commodity increase and how do you get it. That's not the way to read it, is my opinion. Probably, we're not giving a share what is the commodity increase, but definitely commodity increase has played a role in the revenue, no doubt about it. More or less what Tanya said about 2,500, you can add plus or minus 10%. More, not minus, at least 10% plus you can consider. But I don't think 25% is the right number. You can refer to see the current revenue level, which is the impact of the commodity, which is not it's not that high.
Okay, sure, got it. So even if it's
definitely
like 10%,
it plays a significant role in the revenue, no doubt about that. But it is not 25%.
Okay, got it. And my next question was on the new product introduction. So if you can give some more qualitative picture on the newer products that we have launched in the last 1 year, how is these new products, shaping up in terms of acceptance from customers, let's say large dia plus even the slipper type suspension that we are talking about. If you can give some more qualitative color, and what are the new products which are in the pipeline? If you can also give some qualitative color on that, it would be helpful. Thanks.
Muthu, you want to talk about 185 and also the 59 introduction?
Sure, Tina. Thank you. See, in the last 2 years, I think we launched 6 platforms of new products, mainly to either improve the reliability or to reduce the cost. For example, we launched for the first time in India the largest crown wheel size of 185, which launched with Mahindra, used in the 55-ton tractor trailers, and subsequently it is going to be used with the various other OEMs. We have upgraded our product, what we traditionally called as 1497 or 440 crown wheel size, into we call it a 15.
Sorry, I can't hear you clearly, sir. Hello? Sorry, I'm sorry to interrupt. I can't hear you.
Can you hear me now?
Yes.
We launched a product called 185, which is the largest axle that is available in India to Mahindra for their 55-ton tractor trailer, and it is running very well now. The same product is being applied with various other customers. The second product is, traditionally we have been making a product called 1497, which we migrated to a product called 59, which is 30% more reliable than the existing one, maybe at the same cost of manufacturing, which is really going to helping us in terms of penetrating into the share, sustaining into the long-term business. We launched 2 more platforms called 160 EVO and all, mainly for reliability improvement and value engineering. In terms of slipper and suspension, yes, we are working with customers on slipper and suspension. Limited trials is going on. But what happened is, with the axle load rating changes happened, the slipper and suspension needs to be a much more higher load. So we are developing gone in for an upgrade of the product and doing the limited trials. But maybe we'll get back to you in the next 6 months about the status of the product, how good it is going to help in the end customers. See, India is an overloaded commodity, and slipper and suspension is a very, very product used in most of the Western countries with the standard systems of overloading and all, not with overloading. So that is one of the challenges, and our engineering is working on developing a product for an Indian-specific application of slipper and suspension.
So also move to 185 for Mahindra, you can talk about the launch.
I told about that in the first. I think we launched with the 490 crown wheel size, which is the largest. The single axle can take 55-ton tractor trailer loads, and also other applications we have launched. We're running successfully for the last 9 months. The product launch has been done 9 months before. Now all other OEMs are taking this axle.
Sure. And in terms of in terms of new product pipeline, any color on that apart from the 6 platforms that you spoke about?
We have 4 other platforms that we are working on at this point of time for a niche market like a transit mixer or concrete mixer those set of products. Maybe every quarter you will hear to know when we are launching the product, and you will get into the, Meritor and Automotive Axle always continue to invest on new product development and new launches. And many times we also make our own product obsolete by giving a better product to the customer. That is the only way for us to keep ahead on our competition and also making sure that our share of business. So we will continue to invest on that part of it for the launches for the new products.
Sure. Thank you so much, sir, for answering my question. That's it from my side.
Thank you, Mr. Parekh. Next question is from Mr. Nikhil Rungta from Nippon India Mutual Fund. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Sir, you mentioned that you are seeing recovery in the CV multi-axle vehicle demand is also healthy. Tipper is also good, except tractors and trailers is weak as of now. But utilization is feedback is also healthy, and capacity utilization is also moving to 60-65% odd. So, sir, in terms of numbers, do you think by FY25 we would be in a position to move to say 2,500 plus odd crores of revenue, and in terms of EBITDA we would be, we can move back to our older margin of 12 odd percent?
Okay, we cannot give you the exact number, but I can give you a little bit of high level indications. What we are assuming is you can see the way the market is behaving. 18-19, the peak, we call peak market amended CV, was around 480,000 vehicle market. We are assuming by 2025 the market would come to that level, or maybe little lower than even that level, to the market size. So currently we are operating at around, and then to 480,000 level, we were at around 1,900 crores, for example. And today, if you see that market is at around 280,000, significantly lower, but if you see our revenue, much higher compared to the drop in market, proportionately if you do the linearity. So I think, we can't give you the number. We will do better than the market year over year. Even in that level, we'll do much better than the market for sure. And obviously, one of our key parameter is to drive EBITDA growth. Even though we have so much of headwind because of the commodity and the inflation, etc., we will continue to grow our EBITDA margin.
Okay, so we would be in a position to reach to 11-12 odd % level by FY25?
Again, I can't give you the exact number. You can do the math.
Right. Sure, sir. That's all from my side. Thank you.
Thank you, Mr. Rungta. Next question is from Mr. Vipul Sangvi from Systematic Share and Stock. Please go ahead.
Sir, largely the question answered. Thanks for that. Just one, extrapolation of the previous question from Nikhil is that there is going to be interplay of the full pass on of the commodity cost, supply chain easing, your capacity utilization goes up, and your investment in automation. All this would ideally should help you improve your margin, right? So are you sensing that there is enough headroom for us for margin to go up even beyond 12%? If I take a 3, 4, 5 year view, kind of.
At least we as management team working towards it. I can say that.
All right, sir. All right. I thank you for that.
Yeah. Okay.
Thank you, Mr. Sangvi. Next question is from Mr. Vishal Srivastava from Swan Investment. Please go ahead.
Sir, most of my question has been answered. Just one question from industry side. Sir, do you see, in FY22, although you see overall MLCV volume has increased from a lower base, but the tonnage-wise growth has been lower than the volume-led growth. So what is your expectation of tonnage growth for FY23 and, in this cycle which is, coming ahead?
No, I think the tonnage-wise growth, yes, I would say that yeah, compared to the vehicle-wise growth, the tonnage-wise growth has reduced because most of these vehicle growths are coming from the medium-duty commercial vehicle versus, during the good years, most of those are coming from heavy-duty vehicles. But I think vehicles are also getting improved because of the axle load, capacity rating, etc. The tonnage of the per vehicle is also getting increased. I think, it is safe to assume that even though tonnage growth also will increase per vehicle basis, the overall number terms also the market would come back to the peak level by 24-25 time frame for sure. Because I'll give you one small indication. This quarter, say for example, January, February, March quarter, on the good years, it used to be around 120,000, 130,000 level. We're expecting this quarter to be at a 90-95% level, which is not bad at all compared to where we were year 2 year back, and now where are we? And if you see the first quarter of this year was some 45-50,000 units or something like that. From there, it is around 95,000 units is what probably we are expecting this quarter to be. And also we see a good indication from even April onwards. So I think, even the vehicle number-wise also the market should come back strongly. Unless, some major disruption happens, the market should come back.
Got it, sir. Thanks for the answer, sir. Thank you. I'll fall back.
Thank you, Mr. Srivastava. Next question from Mr. Jay Kale from Elara Capital. Please go ahead.
Yeah, thanks for taking my question. So 2 questions. First one on your new products. You had mentioned that from the transition to BS4 to BS6 in the initial years, in the initial months of the BS6, the OEMs were not really adopting new products because they were transitioning on the BS6 side. So how is that new product? Has that now accelerated with the market settling down and BS6 settling down? That is the first. And second, just on a clarification on the numbers of the industry that you had given, you mentioned 280,000 units in FY22 versus 197,000 in FY21. Now, if we see our, the numbers that we get, which is the SIAM numbers, the FY21 numbers that we have, which is greater than 7.5 ton category, is around 181,000. So is it fair to assume that the balance is Bharat Benz because, the SIAM numbers don't give Bharat Benz numbers and you probably might be including Bharat Benz numbers in your numbers? And to that extent, if I just back calculate with those calculations, Q4 of FY22 would largely be similar as last year of Q4 of FY21. Is that a fair assumption that you're getting in the Q4 of this year?
Yeah, I think you could assume that way. Last year Q4 and this year Q4 could be more or less similar.
Understood. And you include Bharat Benz, right? Okay. And also
yes, everything.
Okay. And the first question on your new products, how they are ramping up post the BS6, which initially they were not ramping up as much.
Muthu, you want to answer that?
Yes, sir. I think, in terms of this ramp up, I think you asked a question whether it is a BS4 or a BS6. There are certain customers still buying the BS4 from us for their export vehicles. So whether in terms of the BS6 or in terms of the new product launches, we in terms of the volume, we don't split that between BS4 and BS6 in our production and supplies. We continue to track it overall numbers, and we are updated on all the products.
So what I meant was that in the industry transition to BS6, the OEMs were not really incorporating the new products that you all were offering because they were grappling with their own price increases, etc. in the market. Now with that settling down, is there more incorporation of your new products from them?
Sir, our new products is taking care of both BS4 and BS6. So we have upgraded the product and launched it. While industry is trying to pass on their money to them or something, we have been present in all the axles from day one.
Okay, understood. Fair point. Great. Thanks and all the best.
Thank you, Mr. Kai. Yes, sir.
I have to get into a call. Can I get dropped?
Yeah, I think we are overshooting our time. Is any more questions?
No, sir. There are no further questions now. Hand over to Mr. Thimaiya Appanda. Any closing remarks, sir?
No, I think, thank you very much. I think whenever you people ask these questions, it's also a learning for us and also to push us back to our boardroom to really see and enhance and meet your expectations. We will, as I told our management team, I'm sorry that we can't give you exact figures of what our internal targets are for the future. But we as a management team, we have committed to our board on improvising our financials, our company in the future. We will continue to work towards that. Yes, there are headwinds, will keep happening, but we are very happy and successful. At least I can say that even during the peak pandemic downturn years, the quarters, we are able to sustain and not taken major cost actions, which is detrimental for the long-term business perspective. We are not done. So we will continue to focus on our top line as well as bottom line to improvise compared to, obviously, nobody is going to be happy that, at 2018-19 we achieved some 12% and okay, if we achieve 12%, people are not going to be happy about it. So our endeavor is to continue to improvise on that. With that, we will conclude. Thank you very much. Over to you, Shailesh.
No, thank you, sir. Thanks for your time and to your entire team. Thank you. Yeah, we can close now.
Thank you. Thank you, ladies and gentlemen. This concludes your conference call for today. We thank you for your participation and for using iJunction conference service. You may disconnect your lines now and have a great day ahead. Thank you.
Thank you.
Thank you.